Okay, it's the top of the hour, so I think we can go ahead and get started. People are continuing to roll in. It's great to see. Thank you everyone for joining us today for this very important and very popular topic, Carbon Accounting 101. We had tremendous response to this webinar with over 1,600 registrations. We even had to upgrade our Zoom license just to accommodate you all, but we are thrilled to have you join us today, and our goal is for you to walk away with a better understanding of the foundations of carbon accounting and with some tools, strategies, and ideas for you to take back to your organizations to work towards decarbonizing your operations. My name is Amber Artrip. I'm the Vice President of Marketing here at EnergyCAP, and I am joined today by my colleague and partner in decarbonization, Dave Ulmer. Say hi, Dave.
Thanks, Amber. Yep, my name is Dave Ulmer. I'm the Chief Product and Technology Officer at EnergyCAP, which gives me the pleasure of working with our team to help provide solutions to customers with energy reporting requirements, financial reporting requirements, and carbon reporting requirements, which is where we're going to focus on today. So thanks for taking a few minutes out of your day and this week to join us. Thanks, Amber.
Yes, of course. And a few quick housekeeping items before we get into today's presentation. This session is being recorded, and we'll send you a link within 24 hours. And then if you have any questions throughout the presentations, feel free to use the Q&A tab in the Zoom toolbar. We will spend time at the end of the session replying to as many questions as we can, but if we're not able to get to yours, we will follow up via email to answer your question for you. And without further ado, we will go ahead and get started. So quick agenda for today's session. We'll review what is carbon accounting and why does it matter. Then we'll explore the journey to decarbonization and provide you with some insights and tools and tactics to use at your org. Dave's going to provide a solution demo of our carbon accounting software solution, and then we will open it up for a Q&A. But first, for those of you who aren't familiar with EnergyCAP, we are an energy and sustainability ERP. And we allow you to effectively track your energy usage and cost data in a single platform. You may be asking, what is an energy and sustainability ERP? It's a software platform that serves as a single source of truth for all of your energy and sustainability data points. We've pioneered the energy and utility bill management industry, and we have been innovating in this space for 40 plus years. And with that history comes a ton of happy customers, and we're proud to have over 10,000 energy and sustainability leaders using our software. We process more than $17 billion in utility bills annually, and we save our customers on average $500 million annually in verified energy savings. We're really proud of what we've been able to help our customers accomplish, but at the end of the day, our mission at EnergyCAP is to take our clients' energy and sustainability data and make it easy for them to manage consumption, reduce carbon, and drive savings at their organization. I have to give a shout out to all of our amazing clients. We have experience supporting clients in their unique needs and challenges across a variety of industries, from local, state, and federal government agencies to K-12 and higher education institutions, and a vast grouping of commercial clients. EnergyCAP can support the needs of your organization no matter who you are and how specialized your needs may be. And like I mentioned before, EnergyCAP serves as a single source of truth and a single platform for your entire team. You know, whether you're an energy manager looking for energy efficiency opportunities in your portfolio, or a sustainability leader who needs to report on your carbon footprint at your organization's level, or a finance leader who really needs to ensure that utility bills are accurate and paid in a timely manner, EnergyCAP is bringing teams together around common data to support common goals. And with that, we'll get into the meat of today's presentation on what is carbon accounting. Carbon accounting, or greenhouse gas accounting, you may hear it referred to, is the process of quantifying the amount of greenhouse gases produced either directly or indirectly from a business or organization's activities. Carbon dioxide, or CO2, is the most common greenhouse gas emitted by humans. And as a result, all other major greenhouse gases, which you see here at the top, are all other major greenhouse gases are given what we call a carbon dioxide equivalent, or CO2e. And this is determined by understanding the GHG by its global warming potential. And then as defined by the GHG protocol, emissions are classified into 3 scopes. So we have scope 1 emissions here in the middle in green, and these are also called direct emissions. Scope 1 emissions are released directly from sources that are either owned or controlled by the organization. Examples of this include emissions produced from company vehicles, fugitive emissions like methane, emissions from coal mining, or on-site production of electricity by burning coal. We've even seen examples of scope 1, such as gasoline burned for lawn equipment for on-site maintenance. Scope 2 is indirect emissions released from the purchase of electricity, steam, heating, cooling, or other types of energy produced or purchased by the organization. So just because you're not emitting that on site doesn't mean those emissions aren't being released elsewhere when you're purchasing energy. And in 2015, the Greenhouse Gas Protocol guidance was revised to recommend both location-based and market-based methodologies for calculating scope 2 emissions. And Dave's going to get into that a little bit more later in today's presentation. And then finally, we've got scope 3 emissions, which is really everything else. And these are often referred to as supply chain emissions. Scope 3 emissions are indirect greenhouse gas emissions that occur as a consequence of the business activities for the organization. So some examples of this include emissions from purchased goods or services, business travel is a big one, waste generated on site, use of products sold, etc. There's a total of 15 scope 3 emission categories that you can see here in both the upstream and downstream sections. And what's important to know about scope 3 is that they're much harder to track and measure, but they often account for 5 times your scope 1 emissions. And in what we've seen on average is that scope 3 emissions account for about 75% of a company's greenhouse gas emissions. So it's becoming more and more important, more and more relevant, and we'll be talking a lot about scope 3 in today's session as well. So with that, I'll pass it over to Dave, who's going to dig into why does it matter? Why are we here?
Thanks, Amber. So we realize there are a lot of different people on this call and a lot of different experience levels in terms of being familiar with carbon accounting and those who may be very new to it. So we wanted to just start by saying, why is this important? What are some of the factors that are really causing us to talk about this a lot more now than we did 5 years ago, which is when we talked about it more than we did 5 years before that, et cetera. And one of those reasons is because there's a mounting pressure that is forming on executives from many different areas, this pressure about carbon accounting challenges. And this doesn't matter whether you're a private organization, you're a public organization, you're traded, you're a partnership, a limited liability, really doesn't matter who you are. There's this mounting pressure on executives and leadership to be able to report on the impacts of organizations on our environment and on sustainability goals and our progress towards those sustainability goals, and in many cases, our progress towards net zero. So where is this pressure coming from? Well, one of those areas of pressure is investments, investors and lenders who are looking to make sure that the investments that they're making are in organizations that, number one, can track and report accurately on what they are doing. And number two, have a plan for where they're going, because it's becoming more and more apparent to the industry that there are investments that carry with them a real sustainability risk in terms of the long-term availability or longevity of a company to be able to operate as it has historically. And those organizations that are not making plans and adjusting how they do business may be left behind. So there's pressure from the investment community, from the lending community, in terms of understanding what the impacts to the environment are from particular segments and from particular corporations. There's also a drive for transparency from customers. Customers want to understand the organizations that they're doing business with, and this isn't, restricted just to retail customers. This is also business-to-business customers who are really evaluating as part of their purchase plan the types of organizations that they're buying from and the impact on the environment that those organizations are having. So executives are getting pressure even from downstream buyers to make sure that they are being transparent about what they're doing today and where they're going in the future and what their plans are. And these needs, 10 years ago, very minimal. Now it's becoming more and more urgent. And in fact, what we're seeing is a pressure to report on carbon and sustainability goals and outcomes in the same way that those same pressures exist in the marketplace to report on financials, on profits and losses and balance sheets. We're also seeing that same type of pressure on reporting from a carbon perspective. Let's say you're in in higher ed, right? Just because you don't have shareholders doesn't mean that you're exempt from this. Prospective students are now evaluating universities, they're evaluating institutions based on those institutions' carbon footprint and their plans to change over time. This is more and more in the consciousness of everyday buyers, and that pressure is being felt in a very real way by executives, and that's going to continue to put that pressure throughout organizations who need to have the data available so that they can meet these requirements and they can prove that they are really moving towards a real long-term change from a sustainability perspective. You may be asking yourself, so maybe you're new to this, who's asking these questions, or how are we even providing data in a way that is consistent? Well, you'll find that the more you learn about this, that there are a number of frameworks that are available in different parts of the world and around the world, reporting frameworks that require financial grade reporting of carbon, and these requirements continue to evolve. So we've listed here, and we're not going to discuss all of them, but we've listed some of the most common reporting frameworks, and we've tried to give an indication about how they relate to each other as well. Some of the more popular ones, you might have heard of the Task Force on Climate-Related Financial Disclosures, and we've seen just an exponential trend in terms of the number of organizations who are voluntarily reporting to the Task Force on Climate-Related Financial Disclosures. They're reporting that information because it's something that their investors are requiring of them. It's something that is an expectation in the marketplace. As I said, depending on what part of the world you are in, some of these different reporting requirements may be felt more strongly. There may be other ones that aren't represented here that are more important to your particular country or region, et cetera. However, all of these requirements are all based on a foundation of good, reliable data and the ability to be able to show the path from source data all the way through to what you're reporting. What we don't want to see is a shifting reporting where every year the numbers keep changing because either we didn't have full information or maybe our methodologies weren't robust enough to handle the types of information that we're collecting. These reporting requirements are really driving throughout organizations the ability to, number one, collect data properly and in a standardized fashion, and then be able to translate that, like Amber talked about, translate that into CO2 equivalent, carbon dioxide equivalent for reporting. And even as we see a continued evolution of reporting standards, if you have the information and you have the methodologies and you're able to trace that and report on a consistent basis, you're going to be set even as some of these requirements change over time. That's a really important part of having not just a system that can do it, but a system that can do it well and support your organization, not just in the short term, but in the long term, because this is an area that's continuing to evolve as we move forward. One example of some of this pressure that we've been talking about and some of these reporting requirements, some of you may have heard about that in the United States. The SEC has proposed climate-related rules that will require publicly traded organizations of a certain size to report, along with their financial statements at the end of the year. They're also going to need to report their carbon impact. They're going to also need to report on sustainability risk to their organizations. But the SEC isn't alone in this. In fact, just this year, the state of California has proposed rulings as well. And you might say to yourself, well, I'm not a publicly traded company. Maybe I don't need to worry about that. Well, the rules in California that have been proposed are not restricted just to publicly traded organizations. It's saying any business over a certain size that does business in the state of California is going to have to start reporting in a similar manner to what the SEC is planning to require. That reporting is also going to be required to the state of California. Let's go to another part of the world. Let's head to the United Kingdom. If there are participants today from the UK, you might be saying to yourself, hey, this isn't new. We've been doing this for years. In fact, the UK has been a leader here, requiring reporting since 2018 of not just publicly traded organizations, but of private organizations and LLCs and partnerships. So this isn't a question of if this reporting, these requirements are going to happen. It's really a matter of when. And that might be a different answer depending on where you are in the world or where you are in a particular country, but this is coming. And the more you can do now to prepare yourself to have good data recorded in a consistent manner that is flexible and can help you get the data out in whatever format is required to support the regulations that are coming, we want to make sure that we can help support that. And with that, I'm going to turn it back over to Amber to talk about a journey to decarbonization.
Thanks, Dave. So some of you may be new to this and you may be a little overwhelmed by everything Dave just outlined, because it seems like a lot of pressure. But my goal here today is to help you understand where's the best place to get started when you're thinking about your journey to decarbonization. So when you're kicking off your journey, the first place to start is with data. You hear both Dave and I leaning into data a lot, and the emissions data points that there are some that are more easily available and ubiquitous and easier to measure. Think of utility bill data, for example, or water bill data. Those come on a regular cadence about every 30 days in the form of a bill, and you can depend on it. You can count on it to be there, and you can count on its accuracy. That's great. But then especially as we go down into scope 3, there are data points that are harder to measure and are limitedly available. So what's really important when you are thinking about how are you going to pull together your decarbonization strategy is thinking about the data points that are important for your business to measure and the scope categories that you want to prioritize. Many organizations, when they're just getting started, will go through what they call a materiality assessment. And this is how you can organize and strategize the scope categories that are most impactful for your business that you want to monitor. So definitely recommend participating in an exercise like that, especially if you're going to be embarking on scope 3 reporting. But whether you are tracking all 3 scopes or just scope 1 and 2, you need a plan to bring all of this data together on a cadence that makes sense for your business and into a single source of truth, whether that be a spreadsheet or a software system. You need a plan. So that is where you get started. As I mentioned, you need to find a cadence that makes sense for your business. And there's a couple different places to start. You know, it can start with just the annual data collection. This can be retroactive even. You can go back years and pull data from utility bills for previous years, for example, just to have a baseline. Or, you know, some people are pulling together annual carbon reports each year for specific ESG reporting frameworks. Most people are there. right? And that's okay. You're pulling, what happens in this kind of area is a lot of people spend a good amount of their time each year pulling disparate data sources together to try to bring it into usually a spreadsheet for their ESG reporting or for their annual sustainability reports for the corporate, and that's okay. But then we've got some more advanced folks who are pulling in this data on a regular cadence and usually monthly from utility bills. And that's great because you can start to activate more projects in less amount of time, right? And then kind of the ideal state is when you're able to pull in this data in real time so that you can make real-time data-driven decisions about the decarbonization efforts that are happening at your organization. That is really where Dave and I, our ambition is to get as many people to that state as possible, because when we think about, the goals we have globally to, maintain 1.5 degrees Celsius and to have net zero buildings, we really need more people utilizing real-time data and acting on it to accomplish that. So let's say you're able to wrap your arms around the data. You even were able to pull in some historical data from previous years. Once you're able to do that, now it's time to establish targets. And I think what's really important to note here is that when you're thinking about your targets, you need to assume that as your business or your organization grows, you should assume that you will also have an increase in emissions. So this is just an example of, let's say, a company who has pulled a few years of historical emissions data. You can see in 2018, they were just tracking scope 1 and 2. They started dabbling in scope 3 in 2019, but 2020, we all took a dip. So we can't really use that as our baseline year, right? So let's use 2019 as our baseline year. And then 2021, we saw some increases in emissions as we're coming back to the office. And, we should assume that from 2022 to 2030, which is our target year, let's say our target is to decrease our emissions from the baseline year by 25%. We should assume that there's going to be an emissions increase as more and more people come back to offices, as the business grows. Maybe we open up some more offices and we're doing more business. It's all good things, but we need to keep in mind that we'll have to activate some decarbonization measures to counteract that growth. And this line here at the top in light gray would show kind of the pace this company is at if we were to stay business as usual by 2013, right? So what can you do? There are a multitude of tactics to decarbonize your operations. The first step is, like I said before, assessing your carbon footprint, and you should always assume some growth. So what you see here is some business growth, and from there, there's a number of levers that you can pull to decarbonize. We always recommend starting with energy efficiency projects. It is said that the greenest kilowatt hour is the kilowatt hour that goes unused, right? And so we know that buildings account for 40% of global emissions. So if we can all work together to reduce energy in our buildings, we'll be in a much better place to accomplish net zero and low carbon goals. From there, once you've done everything you can in your facilities to reduce energy consumption, there's always work to be done to ensure that you're using the greenest energy sources possible. Electrification projects are a great place to start to ensure, you're utilizing greener energy. There's also renewables and power purchase agreements to ensure that you're sourcing the greenest energy possible that are great options. From there, there's a number of ways that you can address scope 3 based on the type of organization you are. So depending on your business, you could, activate an employee commuter program, or maybe you could install EV chargers, or implement EV vehicles at your organization instead of gas burning vehicles. There's lots of ways to reduce scope 3. So that's another great option. And then finally, order does matter here. I put carbon offsets, and there's a vast amount of carbon offset opportunities that your organization can participate in. And what offsets are means that you're, purchasing or paying organizations who are activating sustainability programs and using those credits to kind of counteract the emissions that you're consuming at your organization. However, you should only use this tactic to offset the CO2 that you can't remove from the operations yourself, right? You should be really careful that you're using a trusted and validated offset source, because abuse of offsets in carbon reporting is considered greenwashing, and nobody wants to be accused of that, right? So let's talk about, once we have all of this data, how are we tracking it? There's the status quo, and then there's the route that we recommend here at EnergyCAP. And the status quo is spreadsheets. And what comes with spreadsheets are manual utility bill entries, meter reads, and data collection from various Scope 3 sources, right? It's obviously not ideal, but it works. And it usually occurs annually, but it can be difficult to access the data. It requires a lot of manual labor. There's a high chance of error. It can create data silos. And I think what's most important of what we're hearing when we're talking to folks who are, trying to work to utilize software and get out of spreadsheets is that spending so much time in spreadsheets takes these very important sustainability leaders who are highly educated and highly capable and who want to activate decarbonization tactics out of the roles that they should be in and puts them into data management roles, right? And so unfortunately, it creates reactive reporting and doesn't give us the amount of time we need to actually go and make and activate the programs that will actually make an impact. Software, on the other hand, automates a lot of that manual processing. It's auditable, it's financial grade. You get some real-time data updates. It eliminates any manual labor and reduces error, creates better collaboration. But I think most importantly, it allows these very important sustainability folks on our teams to go out and do the work that they're born to do and really activate decarbonization tactics at their organization and make an impact. So that is what we're here to talk about today. I'm going to pass it off to Dave, who's going to dig into what is an energy and sustainability ERP and how can it help you?
Thanks, Amber. And just to address some questions that I've seen coming in, yes, this presentation will be made available as well as the recording. So if that helps you to be able to just focus and not take notes as we're going along, know that we'll provide this information to you later on. So Amber really laid out some of the benefits of moving from a very manual spreadsheet, potentially based system over to a more organized, more full-fledged type of software to help with these challenges. And using an energy and sustainability ERP can really streamline your carbon accounting. And what do we mean by that? Many of you may be familiar with some of the benefits of using an ERP from a financial perspective, or maybe from a manufacturing perspective. What we're talking about is really collecting your energy and sustainability data together into a system that provides a lot of flexibility for that reporting and analysis and ongoing improvements. So that type of a system, like what EnergyCAP can provide, includes the ability to be able to input data from many different sources. It could be utility bill information or documents. It could be information from suppliers that are giving you information for you to record for Scope 3. It could be that you have automatic data feeds coming in via APIs or other pushes that are feeding your data sets, or maybe you're collecting data directly off meters and sensors. Those are all capabilities that we provide with our energy and sustainability ERP. Once you have that data, what do you do with it? Well, one of the very first things, and we've hit this a number of different ways, is you need that single source of truth for your data. You need to know that your data is accurate, that you can rely on it. And that includes the fact that an ERP should provide you with automated data validation and cleaning. It should be able to alert you that there's a potential bad input, because as we all know, bad input, bad output, right? So an ERP doesn't just collect the data and store it, but it should also proactively tell you, I think there's something wrong here. Go check your data so that you don't do a lot of work and then find out later on, or have worst case scenario, have somebody else tell you that your data is wrong. And then you got to go back and make a change along the way. It also needs to be able to go granular. When we talk about carbon reporting, we need to be able to go all the way down to the specific sources of information that we're gathering, being able to assign those to the right scopes and categories and the right factors for converting those activities into CO2 equivalent. That's really important. That is a basic need of an energy and sustainability ERP. You also need to be able to have easy to use analytical tools so that not only do you have the data, but then you can get value out of that data. You can get the data into the format you want to be able to analyze it. Like Amber said, having your very skilled team members be able to spend their time using the data to their advantage. That's an important part of a system like this. And then if we're really going to make measurable change in the long term, we need to be able to see what's going on right now so that we don't have to wait 30 or 60 days or even longer to be able to see what's going on. We need to be able to have visibility into what's happening right now with real-time monitoring of our energy use and our carbon use and our water and our waste. That's an important part of being able to really drive to net zero, is that you're on top of your data, you're on top of what's going on within your organizations, and you can make changes. Those are all key elements of an energy and sustainability ERP and things that we can provide through our software platform at EnergyCAP. And then on the other side of it, you don't want to trap your data, right? You want to make sure you can get your data out, that you can get the data out into the formats that are required. You can give it to the reporting agencies, you can give it to your investors, you can get it to your stakeholders in lots of different formats to support all of the goals that you have. Because if you have your data trapped, what's the value of that? Because we know this is a living system and that information is valuable. So you want a system that can provide really good outputs on the other side and link it together from input through validation all the way to the other side of that as well. So how do we do that at EnergyCAP? Well, we've got several products that build up this energy and sustainability ERP, which is meant to be your single source of truth for your energy and sustainability data. So I'm going to start on the right here with our Wattix product. And the Wattix product allows you or provides you with real-time energy and sustainability analytics. You can read information from meters, from devices, from sensors, and you can use that information to deep dive into what's going on right now in your facilities, in your processes. It can alert you when there's a problem so that you can react and you can, like Amber said, save that energy now, because everything that you avoid is something that you get to save on the other side. It's the cheapest, best way to avoid carbon output. Then we move across to EnergyCAP, and the EnergyCAP product is a portfolio level energy and sustainability reporting platform. It takes information from utility bills, it takes information from other energy sources, it takes information from Wattix, meters, et cetera, and it provides a portfolio level view of analysis and the opportunity to report on your data, to get your data out to many different stakeholders in a very easy to use manner. But it's meant for a portfolio where you can have lots of different levels of analysis. You can make sure that that data, again, is not trapped. It's available to you in lots of different ways, so you're getting the most out of your energy and sustainability data. And then we're going to move across to Carbon Hub, and we're going to spend the rest of our time here talking about Carbon Hub, which is that financial grade greenhouse gas accounting tool. And why is it financial grade? Why does that matter? Well, we talked about the fact that investors, lenders, even your suppliers, even if you say, I don't have a requirement today, you may have to provide data to other members of your supply chain who are requiring it from you because they have that type of regulation that's applied to them. We need to be able to provide financial grade information about our carbon accounting so that it can stand up to audits, because that's part of these processes that are coming in place. Just like we have financial audits, we're going to have carbon audits as well. Carbon Hub is that place to store your information, to calculate your information, to provide the auditability, to make sure that you have the access levels right so that you can rely on your data, and then you can also get that data out to the reporting platforms that are required as well. And we provide services across that entire spectrum to help you manage that data through Wattix and EnergyCAP and Carbon Hub as well. So with that, we're going to take some time just to show you what do we mean by our Carbon Hub platform? What are some of the things that are really key to making it work in order to provide you and your organization with the data that you need in the ways that you need it? So I'm going to go ahead and share my screen here. For those of you who haven't seen it before, this is Carbon Hub. Carbon Hub is part of that energy and sustainability ERP platform that EnergyCAP provides to our customers. So when we talk about carbon reporting, let's go back and say, what are those important things that you need to know? Well, you need to be able to first track and record information. Could be utility information, it could be information from suppliers, some other type of activity. You need to be able to record it. You need to be able to assign it to the proper scope and category. That's an important part of the carbon reporting requirements. That means that you also have to be able to translate that activity correctly into CO2 equivalent. That's another key aspect that we're going to demonstrate here. You need to be able to do that, and it can be a little tricky sometimes getting the right factors, and that's something that we provide as part of our service. And then once you have that, you want to make sure that you can report and analyze accurately as well. So we're going to take you through those different steps and show you some of the capabilities that are available within Carbon Hub. First off, you want to be able to organize your data in a way that makes sense for your organization. So what you'll see here is I've provided an example that is based on geographic region. So we've got a commercial real estate company that is providing services throughout the world, and they want to make sure that they're tracking their energy use and their carbon intensity, all of those different things. So what we've done in this particular case is organize data based on the region of the world where the carbon is being recorded. That makes sense in this organization. Perhaps you'd rather organize your data based on different parts of your organization, different divisions, maybe based on different product outputs. The great thing about Carbon Hub is it provides that full flexibility to do that. You can organize as many levels of data as you would like. You can rearrange if you need to, and know with certainty that the source data is not going to be modified or mutated through that process. You have the ability to make the choices that make the most sense to your organization. One of the best ways to do that is by setting up a hierarchy that makes sense, where you get reporting information at every level of the hierarchy on your carbon accounting data. That's one way to do it. We also provide other grouping mechanisms and benchmarking mechanisms that we won't have time to show today, but that's all an important part of bringing value to the way that you record and report on your energy and sustainability data. Now, in this particular case, we have all of these different regions around the world where we're tracking real estate that we're helping provide management services to for our customers. But we also have some corporate activities as well. And those are activities that really are core to what we do. It might be a headquarters or a campus or multiple campuses that you have where your employees work on a regular basis. So it might not be part of the service you provide. It might be just part of your everyday operations. We can break those out as well. When we start to track this information, one of the things that's important is to be able to lower the amount of energy that it takes from your team to get good data out on the other side. So one of the things that we have built into Carbon Hub is the ability to set up some really sane defaults. Now, here's an example of just some of the things that you can track in Carbon Hub. And in fact, this list is limitless. You can add as many items as you'd like to this list. But for everything that you're tracking, whether it's energy related or maybe it's a scope 3 type of emission, for each of those things, you can assign the proper scope and category so that as you're adding more and more data into the system over time, as you continue to grow and expand, you know that the information is automatically going into the right category. So there's a lot less that you have to verify on the other side. So you can choose the scope and the category and set it up as a default. You can also say, well, where do I get my factor from? How do I convert that thing that I'm using into CO2 equivalent? Well, that's where we also provide a lot of different options. And those are services that we provide as part of Carbon Hub. In fact, we're bringing in the background, factor information for utilities and other services all around the world. We're getting data from the United States Environmental Protection Agency, the EPA. We're bringing in information from the IEA as well, the International Energy Agency, for global electricity use and production around the world. We're bringing in data from the UK Department of Environmental, Food and Rural Affairs, DEFRA, bringing in those factors to support scope 1, scope 2, scope 3 activities, and bringing in information from even more places so that you don't have to worry about it. You know that that information is kept up to date as we go through. So as an example, as we look at electricity use, not only do we have North American regions, but we also have areas all around the world. and averages and factors as they change, and we're maintaining that in the background for you automatically. So it's important to be able to set things up easily. One of the ways we do that is providing defaults. I've spent some time talking about factors, and that's a real key part of having accurate reporting, is having good factors that convert the data you're tracking into CO2 equivalent. We've got a lot built in, but we also understand that each organization may have unique requirements, or you might already be doing things to help your organization out through power purchase agreements, where the average blends that come from these reporting agencies doesn't apply to you because you're already doing something. You're already being proactive. Maybe you have a power purchase agreement from a renewable supplier that actually changes your electricity mix and your CO2 emission mix. Well, Carbon Hub accounts for that too. So not only do we have all these built-in factors, but you can create your own custom GHG conversion factors as well, as many as you'd like. And this isn't just a simple list of factors that you track. In fact, each of these factors has the ability to change over time. And it doesn't just apply to utilities. So here we can see that for this particular organization, they actually have a custom air travel passenger mile based on the mix of the airlines that they use, based on where they are in the world. Perhaps they're even paying for carbon offsets as part of their travel. So they can track this information, and it can change year by year. And they can track it all the way back to the emitted gases that need to be translated into CO2 equivalent. And EnergyCAP and Carbon Hub, we take care of all that conversion for you, but we have the flexibility here to be able to provide your own factors, because we know that that's really important to most organizations, to be able to use some factors that are provided by others and still manage some factors on your own. And we also provide full transparency into every factor that we use within the system so that you can see it, you can verify it, you can provide it to an auditor so that they can see how, regardless of which factor you're using, whether it's provided by us or by you, how that factor has changed over time and all of the source gases that are part of that mix. And here we're showing methane, carbon dioxide, nitrous oxide. Those are the three primary gases that get reported, but we're not restricted to that. In fact, you can see here, we have over 60 different gas types that you can track within Carbon Hub that will convert to CO2 equivalent to provide for easy and consistent reporting. So it's important to be able to get as much by default as possible, but still have that flexibility. So that's important to us. Now, what does this look like on a day-by-day basis? Let's go into a particular, let's say an electric meter, where you're already tracking utility bills within the system. Now, you might be doing this on a monthly basis, or maybe you're just collecting the data once a year, as Amber talked about, and converting that for reporting purposes. Regardless, one of the benefits that you get from Carbon Hub is that we take the data that you provide and we actually split it into the months when the activity occurred through a calendarization process. That allows you to have the most accurate, consistent reporting, even as your data sources may give you data on a very limited basis. Let's say propane sales only give you data quarterly or something like that. Carbon Hub will actually split that information out into a calendar basis so that you can have consistent reporting quarter by quarter, year by year. And you have full flexibility to say that for this particular item that I'm tracking, this resource or source that I'm tracking, which scope and which category is it assigned to? We looked at that before. And then you can choose which appropriate factor should be used to convert this information into CO2 equivalent. So here we're looking at an electric meter based in Africa, and we're actually using an African average that's been provided by IEA, part of the service that EnergyCAP is providing through Carbon Hub for this particular meter that's being tracked. So as every utility bill or every record is being recorded in the system, we're automatically converting that on behalf of our customers. And if you want to see that information, again, we want to make sure that you can support robust auditing requirements as well. So you can see the full history here of how those factors have changed over time. And as we provide additional new updated factors year by year from each of these sources, all of that information is available at your fingertips. We talked about the fact that utility bills and buildings, those often account for a significant part of our Scope 1 and Scope 2 tracking. Electricity, natural gas, chilled water, etc. But what about Scope 3? And Scope 3 is where we start to get into some more unique aspects. not just with scope 3, but even with some of the things we're doing with scope 1 and scope 2, like Amber mentioned, carbon offsets or maybe renewable energy credits. Well, first off, let's look at those. EnergyCAP provides the ability to track renewable energy credits, and you can put these, in this case, I happen to organize them all at this corporate activities level, but if you don't have to do that, you can actually take these and assign them to each of the buildings that we're tracking with the system, within the system, or within each region, if you'd like to do that. Totally flexible, up to you and your organization about what's the best way for you to organize your data. But you can take renewable energy credits, and you'll see here that we actually have negative CO2 emissions because we're essentially saying, okay, for this information that we've recorded at the site, which is what we actually used, we can make a market adjustment to say, yes, we use this much electricity, but there's a market adjustment that we want to make to say, what is the net effect of the two? So I can both report on the site use, and I can report on the market adjusted CO2 emissions of a particular site. So that's here, carbon offsets. If you are using that as an organization, we understand it's a means of last resort, but we have that information here too. So you can record carbon offsets, you can record those negative values as well as costs associated with those so that you can tell a story about how much those offsets may be costing your organization as you go. We can even track things that are outside the 3 scopes if you're tracking some of the biogenic information as well. But let's go into the scope 3 information, because this is where the rabbit trails start to get pretty long. It's not that it can't be done, but you need to be able to have a plan. Carbon Hub provides you with the tools so that you can track things like purchase goods and services. This is an area where, as you're purchasing things from your upstream suppliers, you might need to record some of that CO2 emission in terms of how much you spent, right? We might not actually know exactly what a particular supplier, what their CO2 emissions look like, but there are industry averages that are available, and that's part of that data that we are providing in the background as part of Carbon Hub. So you can track information from a purchase goods and services perspective by cost, by what you're spending, by weight, by volume, by distance, depending on what those different activities are. We have the factors loaded in the background to allow you to do that and to record it accurately, dependably, and have that history and that auditability that comes with that. The same thing's true with capital goods that you may be purchasing and using as part of your business model. What about business travel? This is another big one. And one of the areas that maybe if you've been tracking carbon for a while, this might be an area that your company is already taking care of. Well, we provide lots of different tools and options that are available here to be able to track this. You can even make this available to your employees if you want them to track information on their own. You can import this information as often as you'd like through spreadsheets, or you can enter the information, but we have built-in factors for converting between travel, whether you're tracking based on let's say distance, miles or kilometers traveled, or maybe you're tracking information based on the types of vehicles that you're using on a regular basis. All of that can be tracked and reported and collected together. Same is true for downstream scope 3 activities. We can be tracking all of the different things, especially for manufacturers. This is a really important thing where you can track how your products are being used and roll that up in your scope 3 information. So lots of flexibility there. What about from a reporting perspective? What do you get when you want to start reporting on this information? Well, as you've been seeing throughout Carbon Hub, as I roll up through these different levels of the hierarchy that I've built, we automatically get these roll-ups of information that help break down our CO2 emissions into different scope categories. We can see our trends for what are the areas within our business that are trending positively or negatively. We can see how we're doing compared with our targets. Are we on track for this particular fiscal year to be able to meet our target in terms of getting us towards our ultimate goal for where we're headed? And for all of this information, you have the ability to not just see it, but also see all of the details that are here and even copy that information, out to other places like Excel or spreadsheets, et cetera. We can also really easily, if there's no setup here, you can simply click on a particular building or node within this tree and get a full visibility into what are those areas. Maybe it's within your scope 3. what are our scope 3 sources that are really affecting our business and our ability to really drive towards net zero? We provide that information. And you can roll this all the way up to your entire organization level. So you can roll all the way to the top and see as an entire company, or I can see it as a division or a particular geographic area. What are our missions? How are we trending? I can see that data. All of those details are available to me so that I can see those. I can see what my targets are. I can copy that information out. All of that's built in right out of the box with Carbon Hub. But we also know it's really important to be able to share that data with others well, even those who may not be familiar with a tool like Carbon Hub. And that's where we provide dashboarding capabilities that are also available. You can customize for yourself you have the ability to create as many different types of dashboards. They could be based on region, activity type, manufacturing, process, etc. You can create these dashboards. You can easily filter them to a particular part of your organization just with a click of a button. And if you'd like to be able to share this with others outside of your team, you can simply share a dashboard like this publicly. And you can get a link that you can give to anyone, and they can load it in their browser without a login. They'll see exactly what you want them to see so that you can tell your story properly. You can even embed these dashboards within maybe your intranet or maybe even publicly for investors or to share transparency with students or other stakeholders of your organizations. All of that comes as facilities that are available within Carbon Hub and part of our energy and sustainability ERP. The last thing I'm going to point out is that we also provide reports because, again, sometimes it's one of the things that's really important is getting that data out in a consistent manner. So we provide built-in reporting tools that provide the level of detail you need to support audits, to support reporting needs for your financial statements. We break down the information by scope. We break down the information by gas types as well. So you have all of that information available to you. You can even see the trends from a fiscal year perspective so that you can see how you're doing year over year compared with a baseline period. This is at a macro level, and you can actually pick any level in the tree to provide this, but you can also run your reports by building. So you could see building by building or process by process exactly how you're doing and what your intensity level looks like from an energy perspective and from a carbon perspective. If you're like me, and you love Excel, or maybe you know that you need to copy the data out to another reporting guide or website or into another template that may be provided, we also provide built-in reports that gather your data and group it month by month. Remember, I talked about that calendarization process. We group the CO2 equivalent data month by month so that you can have that at your fingertips for each organizational level within your node. Here, I've rolled it up to those different geographies. I could also run the same report by building. And now I can see the information by building level for a particular fiscal year, easily get at this data, provide it to someone in terms of a report. I can even go all the way down to the source information. And I can say, okay, I want to know each source by source for, if this happens to be for just one part of my tree, what are the different sources? What scope categories do those fall into? What are those values? And you can see here, even the offsets and things like that are represented. So you can easily get at this data, provide it to others. It's an easy to digest format, easy to use format. And we provide other services through APIs and other BI integration tools to also get your data. It's really important to us that if you're going to make meaningful change with this data, that you need to be able to have it in the way you want it, in the formats that you need it, so that you can continue to drive your business towards your sustainability goals. So that's just a real high, quick overview of some of the capabilities available within Carbon Hub. There are a lot more, but we wanted to at least give you a taste for some of the things that an energy and sustainability ERP like EnergyCAP and Carbon Hub and Wadex can provide to you to make your life easier, to help you focus on making real change instead of spending your days, nights, or weekends trying to just calculate raw numbers. That's not where we get value. We get value when we can make decisions based on the information that's available to us. So with that, I'm going to turn it back over to Amber to lead us through some Q&A.
Thank you, Dave. That was excellent. We got a ton of questions, but before we dig into questions, I wanted to quickly invite everyone on the call to our Catalyst event, which is coming up April 25th through 27th in State College, Pennsylvania. We will be doing on-site, hands-on work with Carbon Hub, Wattix, and EnergyCAP, our full solution suite. We'll have customers on site as well who are going to be sharing their stories and experiences using our solution, even teaching some of our training sessions. It's going to be an awesome event. And we are going to be giving away 1 year free of Carbon Hub to one lucky attendee. So if you liked what you saw and you want to explore utilizing Carbon Hub at your organization, come to Catalyst and maybe you'll win 1 year free. But one of the questions we did get, Dave, was about how we bundle solutions together and if we're able to license Carbon Hub and EnergyCAP together or if they're separate licenses.
Oh yeah, thanks, Amber. So yes, all three of our products, the Wattix product, the EnergyCAP product, and the Carbon Hub product can be licensed independently or licensed together. Obviously, if you get them bundled together, there are some really nice overlapping benefits that, for instance, if you have EnergyCAP and Carbon Hub together, you have the ability to record your utility bills and maybe even be processing utility bills to an accounting platform, and those same utility bills are feeding Carbon Hub from a carbon reporting perspective. So yes, you can purchase those together and you get the benefits just like you get benefits with Wattix and EnergyCAP or Wattix and Carbon Hub, or you can buy them independently as well.
Awesome. We got another question about integrations and if we're able to, and how we're able to pull in data from other sources and systems. If you want to talk a little bit about that, Dave.
Sure, yeah. It's really important because you, again, don't want to be spending your time trying to get data into the platform. So we have several different ways that you can get data into Carbon Hub. One, you can manually enter it. We have screens where you can manually enter the values and save those as often as you would like. I talked about that with employee commuting as an example. That's one option. A second option is that you can import files, import spreadsheets on your own. We have a flexible tool that's available within Carbon Hub that allows you to map files that you have available to you into Carbon Hub, and you can just upload the data directly in. That's another option. We also have the ability to integrate with other systems. Everything that you saw me do within Carbon Hub is available programmatically as well. We have a full set of documented APIs that's available to our customers. So you can have systems feed data in live from a platform that you have. We also have the ability to work with your teams to help build some type of an ongoing reformatter that just takes the data out of a system or a platform that you're currently using and put it into EnergyCAP. All of those are options that are available. Whether you're using EnergyCAP or Carbon Hub or Wattix, we have all of those different options that are available to you. So lots of different ways. Don't let where your data sits now be a barrier to getting value out of it, because we can help you make sure that you have a very effective way to get the data from your source system into Carbon Hub for accurate reporting.
Awesome. We got another great question here about if the system flags inconsistencies that may arise in the data or any human-fed errors, et cetera.
Yeah, absolutely. So one of the benefits, and some of you I know are our current customers using EnergyCAP, so you're probably very familiar with some of the audits and validations that we provide. Those same things exist for Carbon Hub. So as you're entering or bringing data into the system, one of the things that you have the flexibility to turn on and turn off is how much you want Carbon Hub to help alert you of problems, whether that's hand-keyed data or it's imported data into the system. We can automatically flag items that look unusual, that don't follow patterns that we've seen historically, so that, again, we want to alert you of those things by flagging those inputs on the way into the system so that you know about them at that point in time, because that's the cheapest time to make a change and correct the data or go verify it before you start reporting and doing other things downstream. So yes, those are some of the services that are built into Carbon Hub.
Awesome. We got a question if we do materiality assessments. I'll take that one. I know I mentioned it. We do not do materiality assessments. That's normally something that's done by a consultant. However, if you check out the GHG protocol site, there are some recommendations based on your industry about what scope 3 categories are most common by industry. So that's a great place to start if you don't want to invest in a consultant. We can send that out as well. But we are at time. We have so many questions. I'm so sorry we didn't get to all of them, but we will be following up with you. And if you are interested in learning more about Carbon Hub and EnergyCAP and Waddix, we'll be sending out an email shortly. Please reply to that, and we'll find time to connect you with a representative to do a deeper dive into our systems and solutions and explore how we can work together. So thank you all for attending. Thank you, Dave, for being my partner in decarbonization. It was a great event, and I appreciate all of you for being here with us today.
My pleasure. Thanks, everyone.
Thank you all. Take care.